evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for Thursday, the 4th of September, 2025. Wow. So you came back today and had a heck of a day in the stock market. I think what happened, to tell you the truth, is that the market started looking at a few things, and I think one of them they looked at was in the morning, the Challenger gray numbers, the employer plan job cuts, rose to 85,000 from 62. The ADP number came out 25,000 basically less in jobs. That's not good. So you got more cuts coming, you got less jobs created, and more people went on unemployment claims. Yesterday's JOLTS report, we saw, 176,000 or so less jobs out there. So you had 4 of the 5 elements needed for the Fed to make a move, in my opinion. Tomorrow's the big day. They're looking for 75,000 jobs versus the revised 73,000 that we had. Remember, we had a person fired because the president didn't like all the revisions. The August jobless rate is expected to go up 1/10 to 4.3%, and the average hourly earnings are expected up 0.3. Can you imagine if these job numbers come out sharply stronger tomorrow, what the president's going to say? Because that could stop the Fed. I mean, if you had 125,000 new jobs, I don't see how the Fed makes its cut, not in September. If you get 75, why not? Get under that? Yeah, I think it knocks the nail in there. So that's where I think we're at in this market. Let's talk about something else. You have a couple of hours left because at 12 o'clock a.m. Central Time, which is Friday, 11:59 p.m. this Thursday, today, the end of the sale for my futures video research. So if you're a SPDR person, you can get the futures and the SPDR the next 3 months for $67, $22 a month, roughly. I put out 22 videos each month. So you're going to get 66 videos approximately for that, and each one telling you buy here, sell there, do this, do that. I will be wrong, I will be right. You're going to see both things develop. When you take a look at the core charting course, this was $600 a month ago. I've taken it down to $250, and I knew I was going to discount it. I'll probably take the price back up, $168. Then $120, no. The Bollinger Band or the outside day courses, either of those, $80. All of them include my written research when it comes to charting software. You see me using these. We give you a lot of goodies to get you really comfortable with what that is. All right. So let's take a look together at what we basically have here. It was a nice day. You saw the metal markets down, some profit taking. Tesla went back up, down the other day, back up now. ARK still didn't move with it, which was interesting. NVIDIA gained something back. Home Depot had a solid pop here. Home Depot will be a winner if there's rate cuts because people will have more money. They're going to say, well, let's do a little more in additions or restoration to our house, whatever it might be. They should do well with that. That's my guess on it. But let's go to the market. ZS Scaler, it's one of the markets that's been coming down. Will it be able to find a bottom here is the biggest question. When you look at the chart, you've got a higher high and a lower low. We can see that the market lost the battle of fighting at the 18-day average and entered a downtrend. I don't see anything on this chart to negate that at this point in time, except it's hit the 100-day average in green in the Bollinger Band. You only stay under a Bollinger Band 5% of the time. So I think the professional money took money off the table and they're sidelining themselves. Momentum pointing down, bias down, but not really trending per se. Oklo. So Oklo is in the development of fission reactors, slipping back. That was the big story that began all the way back here, if you'll remember, in May. Oh, we're going to get fission, we're going to go crazy, and the market went nuts. Now, like MP, it's giving some of that back. Same type of chart pattern. Netflix finally popped up to the Bollinger Band. I had my clients wrong in this market, bought it a bit too high in my opinion. What would you do if you were me and now you've got a nice profit? You didn't break the bank, but you have a nice profit and you hit the Bollinger Band. Bye, bye, Miss American Pie. And nice one to bank, and now we'll take a fresh look. It's overbought. Add a Bollinger Band. Let somebody else have it right there for a moment. UNH, still acting better. It's got the embedded reading. It needs to pop. If it does pop from here, then I look for the 325 to the Bollinger Band, 331.75 area, 76 to be the resistance zone if it can get the pop. Home Depot, as I said, coming out of this, couldn't in this whole correction get back under the 18-day average. The chart action has been okay. It's overbought again. It's not trending. You have a lower low, higher high. You have upside bias, and you've had that. I'm not in love with it here. Robinhood, will it be able to base out? Because where's the question of the cryptos? While it rallied today, there's a lot of crypto in this, and Bitcoin's been getting beaten up. Tesla, all it's doing is staying at the 18-day average. I keep reading articles of things that Elon Musk is saying, and I don't know that he's really in love with his cars anymore. I think he's much more in love with his new robots, and I think that's where he thinks Tesla is headed. I really believe that from everything I'm reading. Joby, looking for more of a correction. Let it run its course here. This is a market that came from right down here, had a heck of a rally, but the product's really good. Now that they got the FAA involved and they're doing their test flights in America, it's a story that you want to pay attention to. It's not ready to buy. XLF, not a trend. How many of these aren't trending? Isn't it amazing? You have a higher high and a lower low. While the bias is up, that's not what I call a trend. XLI, you've gone from the upper Bollinger Band to the lower band and back to the 18-day average. Look at the sideways action that you've been in. If you think you can make money in that, great. Most people can't. In XLE, are we going to fall back to the 18-day average? You've just lost your bullish momentum. So the odds favor that unless you can re-embed tomorrow, that this market's going back to the 18-day average before it makes a new high. That's the odds. In the gold market, all you're doing is stepping back to the Bollinger Band. Nothing's over here. You're fully embedded. You need a deeper break to be a buyer, not up here. And the same in SLV. You want to get more of a pullback in the market if you're thinking of coming in. Same in the copper. All have embedded readings. Can they hold them? Do they get a bid if the numbers tomorrow come in for a Fed cut? Or do they get hit if the numbers come out so strong that cut goes in doubt for the month of September? BND, trying to hold its best. The 18-day average, got under it yesterday, popped right back. Actually, 2 days ago, you got under it, which was Wednesday. You popped this Tuesday. I got this all backwards. Tuesday, Wednesday, you got back over it, and today you're up to the Bollinger Band. So these are people taking big bets on what the Fed does or doesn't do, and you're going to be tripped up in the dollar and the FXE. If you cut interest rates in a currency, normally that currency drops. If it drops, why is the dollar rallying? So it's going sort of backwards right here, and FXE is dropping. So which way is this market going to go? If you think you can answer that, I wish you the best. I'm not going to try to be that wise guy. Remember, you can move your cursor up here. You can go to IraEpstein.com, take advantage of our research, watch the other videos tonight, and I'll catch you first thing in the morning as we review what the numbers come out like on the jobs